Welcome to another Money 101 episode. This is basically the series that talks about money, finance, and different good stuff like that. So basically, this kind of introductory series we're having here, basically in the beginning, we talked about a couple foundational things. Then last time we talked about Forex trading. And this time around, I want to dive into stocks trading, okay? So I've been able to brush up on stock trading a little bit more. I've been doing a little bit day trading, a little bit long-term analysis and different things like that. And I have a couple of tips for you. And full disclaimer, before we even continue, I highly do recommend, if you're very interested in stock trading, I do recommend you go and find a person who does this completely full-time and fully is engaged in it. Now, I do stock trading as a part of a portfolio for my long-term investments, for my asset allocation, different things like that, okay? That's just a, full disclosure. I like putting that out there when I'm talking about things like stocks or Forex trading and different things like that. Okay, I have information and knowledge in them and experience in them, but there's always someone out there who's better than me at this stuff. All right, good. So on this episode, I wanted to talk about a couple of tips I have so far on stock trading. Now, before we even get further, some people usually say like, "Well, Steve, some people might not have access to the New York Stock Exchange." Or maybe different things like that. But still, let me talk about something here. If you bought Safaricom stocks a long time ago when they were worth $6 a stock, they're now valued at $30 a stock. So you still would have been able to 5x your money if you bought your stocks on the Kenyan exchange. And of course, there's South Africa and there's etc. So you're able to do research on your local exchanges. Now, of course, you can still be able to find different brokers who are able to provide stocks, because I do know there's Forex brokers who are able to provide for you to be able to buy things like Netflix, but it do provide at different levels of what is it called? Different capital level, different leverage levels. So I'm talking about Forex brokers who allow you to be able to trade Netflix or Facebook and different things like that. Okay. So anyway, that's kind of a side topic that you'll need to research since it's very different location based, and you want to go dive into that. So I just want to talk about some couple of fundamentals on this episode. Okay. And as always, if you have any tips for other people, please just comment in the section below. I've really been loving people on YouTube who've been commenting on the recent video that I uploaded a while back, and people have been commenting and providing some tips. I want to give out a shout out to Kenya and Ghana for putting some tips out there. Thanks for putting that out there. Encourage other people to do it as well. So, that's enough setup and mumble jumble there. Now let's go into the actual topic for this episode. So the first thing that I usually do when it comes to any kind of investment, okay, it doesn't matter if it's stocks, doesn't matter if it's Forex trading, doesn't matter if it's in general in business, whatever it might be. We have high risk, okay, we have medium risk, and we have low risk. Now, I'm not about to go over how you should divide up your portfolio on this because I already made an episode on this in one of the earlier Money 101 episodes. So go on my YouTube channel and watch that, or go on Facebook and find that and watch that before you come to continue in this section here, because what I'm about to talk about is basically diversification of your portfolio. Now, if you're younger, you're able to kind of take more risks. You're able to be like, okay, I really want to invest in something that's going to give me a higher return on investment. So, like for example, for me right now, I'm actually very focused on high risk investments, okay? The reason for that is because I'm trying to get a higher return, especially within this earlier time frame, where I'm able to get a higher return, and then I'm able to move my assets towards low risk investments. They're able to give me pretty good returns. They're very stable, and then also medium risk investments as well. So that's kind of what I am in my mindset. For you, it might be different. For you, it might be like, hey, look, I already have a lot of cash. I'm not trying to put in high risk investments. I want to make my portfolio more of about, I don't know, 65% very low risk investments, and you're able to divide out the other one between high risk and medium risk, okay? So it's very personal. It's very different for you. So it's the same thing with stock trading. There's different stocks that are a little bit more wild, and there's stocks that are very stable. They're very nice growth and returns. Similar to kind of how Warren Buffett, his portfolio is very boring. It doesn't have like crazy stocks like Snapchat or anything like that. It's actually very much like Wells Fargo, Coca-Cola, companies that he knows about, the industry he knows about, and he likes investing in industries that have been there for a while. So that's kind of Warren Buffett's style. He's not out here chasing the next big Snapchat or whatever it might be. He's actually very the reason why I say boring, it's not because he's not doing great returns, which he is, by the way, one of the greatest investors who ever lived, but he knows how to trade based on his style. So he probably did take some wilder risks during his younger years, and now he's kind of, a little bit kind of, he's pretty good with 20% return a year. which is very good for the stock market. So that's the first thing you want to do. You want to be able to gauge where you are as a stock trader. Are you more interested in the kind of the Snapchats? Are you interested in, trying to find more higher risk investments where, Snapchat might not make it all the way, but it also has a chance of becoming worth $100 a share. Right now it's at $16. So different things like that. Of course, I'm not about to enter my rant into what I think about Snapchat, which will be a later topic, but basically you want to be able to do analysis like that. That's the first co-foundation. You have to know about those things. Now, the next thing is actually understanding what type of trader you are. Now, we have day traders and we have traders who just hold for 10, hit my laptop, let me just put it aside here. Okay, so we have traders who basically hold in the market for like 10 years, and then we also have traders in the market who basically are trading daily or trading weekly or monthly. Now, if you're going to be trading weekly or daily, chances are you have a pretty good chunk of capital. Now, of course, we have different things like margin trading and different things that give you a little bit more leverage. But if you're trading the raw stocks and your market is moving maybe 2-3% a month, there are some stocks out there that, like, for example, this week I was able to catch a stock called Sunrun. It did for me about 16% in a week, and now it's back down to around 11-12%, which is very good for a week and a percent for a stock. Okay, so that's kind of me doing a little bit of week trading, day trading, okay? And you want to know what kind of trader you are so that you can be able to gauge and understand how long you plan to hold. Now, the term of rule when it comes to stock trading or even Forex trading, or I believe in penny stock trading, I haven't done penny stock trading, but I do believe if you don't know your exit, don't enter. Okay, it's kind of like you entering a building and not knowing where you're going to exit. It doesn't make sense, right? It doesn't make sense. So when you're trading stocks, you have to know, are you going to be exiting the trade in the next week, the next month, the next year, the next 10 years, the next 20 years? You have to know what that number is so that you're not going to get too emotional when the market is moving up and down. You're like, oh no, Facebook dropped 10% over this news thing. Chances are this is the best time to buy Facebook, right? Just saying, okay? Facebook is going to be bouncing back up. There's a lot of companies that have had scandals in the past and they've been able to bounce back up, okay? Apple had its own cloud scandal when celebrities, sensitive information got leaked out to the internet, and guess what? Apple did very well this year. So you don't want to get too scared about different things like that. That's why you want to know what kind of trader you are, okay? So I hope that makes sense. And if it does not, go research, go on Google, and find more details, okay? I'm just here giving a kind of a summary. So that's step number 2. Now, step number 3 is actually having a style of trading. You have to know how to read the charts, or maybe not read the charts even. You have to know how to read the books. Because stock trading, that's what it is. For example, my strategy right now is I'm very focused on tech companies, biotech companies, and renewable energy, because that's kind of where I see the future is headed. So for example, for renewable energy, Sunrun, the stock that I bought recently last week, I was able to look at the books. I looked at 3 years of their stock, kind of like their earnings, and I was able to be like, I went to their investor page. Every company has like kind of like an investor page where you're able to kind of get details on their earnings and those different things. I looked at their numbers and I was like, okay, the earnings are going up in the last 3 years. Okay, they're expanding the company, they're doing great. And then I looked at their earnings jump from from last year, from the other year to last year, and I was like, what? And immediately just became like, okay, I have to get in this stock right now. It's very undervalued, and I need to enter right now because I do see the analysis the market is going to be going up. Now, also, I do chart analysis where I'm able to read the charts based on trend lines, support lines, price action movements, and basically historical prices as well. And I was able to be like, this price is probably going to be almost double by the time I exit. I already knew my exit is going to be when I double the stock. And guess what? It's already doing me 11-12%, which is great. And that's how I did my analysis. So for you, you might be able to have a different way you do your strategy and analysis. And chances are you're going to be investing in stocks you're passionate about. You don't want to be buying stocks you have no idea what's going on. That's the mistake a lot of people make. People just bought Snapchat because they thought like it's the next Facebook. And I was like, wait a minute here, okay? Snapchat is not going to be able to do the same exact thing Facebook did. We have to remember historical data. Facebook, when it came out, there was not another big giant social media company that basically trumps the Snapchat. Okay, back then, Facebook didn't have that many competitors. Now, the other things we're able to look at is how Facebook is able to advertise. That's where they make their money. And on Snapchat, if you have used Snapchat, when the ads come out there, swipe. You don't even look at the ads. So as a person who does marketing and I'm like looking at Snapchat, I'm like, that's not a good investment for me as a marketer. And I'm the one who's supposed to be giving Snapchat revenue. So as a stock trader, I'm like, wait a minute, this stock might not perform as well in the market. So those are the different things I'm able to look at. And also, of course, Instagram ended up copying features from Snapchat beautifully. And not everybody's on Instagram because Snapchat's growth has slowed down. It's even on WhatsApp stories, even Facebook stories. So those are different things you need to look at as a person who's trading stocks. Don't follow the news and don't follow the fear of missing out. That is how you'll get emotional, and that's how you'll end up making a lot of mistakes. You want to develop a strategy of trading you can repeat. The same way Warren Buffett has fundamental ways of doing his trading. He looks at the books, he reads the numbers, he understands the industry, and then invests. And then 10 years later, you hear, oh, and Warren Buffett made $1 billion from this investment, right? Like, for example, he has, investments, I believe it's in Burger King, right? And he recently cashed out $1 billion. I think it was more than $1 billion in his original investment. And nobody knew about it. No one was going like, oh, Burger King is the next Facebook. Warren Buffett was like, Burger King, it's doing very good in the books. They're growing here and there. They're doing their numbers. I don't know how Warren Buffett really does his analysis, but he basically does have a strategy down for him to be able to be churning 50 billion plus from his investments, right? So you want to develop your own strategy and stick to it. Don't get too emotional. Don't jump on the hot stock because everybody's yelling at you to get it. Understand the market and trade. Don't be a person who just throws money in the market and is like, oh, well, 10 years from now, hopefully it's there. Okay, there's a lot of stocks, companies that are going under zero. Okay, so those are the tips that I have for you when it comes to stock trading. I hope it made sense. And I'll share more knowledge as soon as I'm able to acquire more knowledge. And by the way, I did put a full disclaimer in the beginning of the video that, hey, I am not the stock guy, okay? I'm just here basically sharing some fundamental financial independency, financial stuff to you as well as I'm learning it. So as I learn it, I'll share with you and I'll be happy to do it. But also at the same time, if you know stocks more than I do, please, I ask and I beg of you to comment in the section below and guide your fellow African entrepreneurs and people who just want to learn about, investments around the world. It'll be great. It'll be wonderful. Okay, so anyway, thanks for watching this episode. Hope you enjoyed it. Hope you liked it. And I hope it did bring value to you, and I hope you're thinking about your future as far as money and stuff like that. Of course, money doesn't buy happiness, but it doesn't mean that you should be ignorant when it comes to money, because guess what? It's there. So you might as well get to know about it, okay? Just know how to speak the language of money, and chances are you'll make more friends who are money. You know how they usually say as investors, you take your dollar and you tell a dollar, go out there and bring more dollar friends. That's what I meant by that whole, how money talks. Because you want to train your money when it goes out there, it's able to mingle very well. It brings that back more money friends. You tell one money dollar, one money coin, whatever goes out, brings back 2 more coins. Now you have 2 coins, now 2 coins, you go there. Oh, I'll come back with 5 people. Oh, 5 money friends, and then you're able to compound growth your money. I think that made sense. I hope it made sense. In my head, it made sense. Maybe not. Anyway, thanks for watching the video. I'm rambling here towards the end. But thanks for watching the video. Hope you liked it and enjoyed it. Subscribe, like the video, like my Facebook, share with your friends, comment. And if you have any extra questions, inbox me as always on Facebook or on YouTube comment section. Peace out and have a wonderful time. Deuce. I'm pretty sure that whole coin money thing made sense. I mean, it made sense. Yeah, money, how to work.